Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today, FOMC day, we have, strange enough, no change on the larger time frame given that we had an insight session. On the daily, we see confirmation of Tuesday's break from the short-term balance uh, as an insight day, and that denotes acceptance of the area, confirmation of the break. But also an inside day is a form of balance. So the market is accepting the levels above the range. Zooming into the market profile, we had a very tight early session ahead of the FOMC, and then we had a positive reaction to the Fed decision, which was dovish, and that was what the market was expecting. We had a swift rejection from the former range high and created excess and pushed all the way up. There was significant acceptance above Tuesday's afternoon high, which is a level denoting change that was highlighted in the morning briefing. So we rejected the range, we pushed back up, and we built acceptance above. And we said that this was very positive. We were expecting acceptance above that level to denote market strength. However, and this is an important thing, the market could not create a separate distribution. There was a lot of hesitation going up, back and forth, back and forth. At the end of the day, the acceptance was created, but there was a lot of hesitation, and there's no double distribution, there's no column of singles. And the other thing is that the upside did not extend the high. The high could not be taken, there's just one tick. And this is, given the fundamental behind the Fed decision and the technical context that we're just breaking out of the range with positive trade news, and then you have a positive or what is perceived as a positive outcome from the FOMC, the fact that you don't take that high is very questionable and could be signaling an underlying market weakness. Perhaps there's a possibility of the market already at these high levels pricing in what the Fed delivered, but I will take this fact very importantly and will monitor very closely. So the immediate focus for the session would be the value development relative to the post FOMC upward distribution, which is this area over here, with acceptance below the early morning high, which is this yellow arrow that we see here at 29.97.25. Acceptance below that level would denote change versus the afternoon, and it will not necessarily immediately be a negative connotation. It will be just increasing the odds that the market has gone too far and is struggling to go up. It doesn't mean that the market will come down. However, remember that we continue carry forward the underlying weak structure at the bottom of the range. So if the case presents itself that we fail on this break and we re-enter this range and we start building acceptance within, we need to pay attention because it could accelerate. Having said that, I think the odds are good for continuation upwards, but I'm monitoring closely due to this important clue of not being able to take the high. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.